The standard Medicare Part B premium in 2026 is $202.90 a month. But some folks opening their very first Medicare bill this year are looking at $284.10. The coverage is identical, just over $974 more a year. And here's the part that catches people. That bigger bill wasn't caused by anything they did at 65. It was caused by money they moved at 63, before Medicare was even on their radar. Now, if you have never once heard that Medicare looks backward at your income, you are not behind and you are not careless. You're completely normal. Nobody sits you down at 62 and says, by the way, the tax return you file this spring will set your Medicare bill 2 years from now. It's just not something anyone tells you. So today, I'm going to be the neighbor who finally does. Before we dig in, go ahead and tap that like button and subscribe so these retirement breakdowns keep finding you. That one click tells YouTube to show this to another neighbor who's 2 years out from Medicare and has no idea this is coming. All right, let's get back to your money. Here's the mechanic, plain and simple. When you enroll in Medicare, Social Security doesn't ask what you're earning today. They ask the IRS for your tax return from 2 years earlier. Your 2026 premium is set by your 2024 tax return. That's straight from Social Security's own paperwork. Hold on, Ray. Medicare looks at taxes from 2 years ago? That's exactly right, friend. 2 years. And if that older return isn't available, they can reach back 3. It's the most recent one the IRS can hand them. The number they pull off that return has a fancy name: Modified Adjusted Gross Income. Don't let it scare you. It's just 2 lines on your 1040 added together. On that 2024 return, that's line 11, your adjusted gross income, plus line 2A, your tax-exempt interest, like municipal bond interest. That's it. That's the whole formula. One thing worth saying clearly, because it trips people up. This is not the same income formula the healthcare marketplace uses for those pre-65 subsidies we've talked about. Those 2 programs measure income differently. Today, we're only talking about Medicare's version, line 11 plus line 2A. And if that number crosses certain lines, Medicare adds a surcharge to your premium. The government calls it an income-related adjustment. I call it what it feels like: a toll. Here are the 2026 lines. Stay at or under $109,000 filing single, or $218,000 filing jointly on that 2-year-old return, and you pay the standard $202.90. Cross the line, and the toll starts. And one quick flag before we go on. If you're married, filing separately, and you lived with your spouse that year, your table looks different, and it's much less forgiving. Check your own row before you trust any number on this screen. So, $1 over and I pay the whole surcharge? $1, friend. These are cliffs, not ramps. $109,000 even? Standard premium. $109,001? The whole surcharge. $81.20 more a month. Every month, all year. Nearly $1,000 for $1 of income. Now take a breath. You don't need to memorize a single number today. You just need to know these cliffs exist and, more importantly, when the ground under them gets set. Because it gets set at 63. And at 63, ordinary, sensible money moves can land right in that window without you ever knowing there was a window. Let me show you the 3 big ones. If you watched our video on the 401k rollover decision at 55, you heard me plant a seed about this, that moves you make with retirement accounts can echo years later. Well, this is where that seed grows. Every dollar you convert from a traditional IRA or 401k to a Roth lands on the AGI line of that year's return as income. Convert at 58? Medicare never sees it. Convert that same amount at 63? It sits right in the return Medicare reads for your age 65 premium. But Ray, I wasn't even on Medicare in 2024. I know, friend. That's the trap. The window opens before the bill exists. You made a perfectly reasonable tax move as a 63-year-old, and it shows up as a toll on a Medicare card you didn't have yet. Nothing changed about whether the conversion made sense. What changed is which return it landed on. Trap 2 is the money your last year of work hands you all at once. A retirement bonus, a payout for unused vacation, deferred compensation finally arriving, or simply a bigger-than-usual withdrawal from the 401k to celebrate. The trip, the truck, the kitchen. Each one of those stacks onto the AGI line in the exact year it arrives. Retire at 63 with a final year send-off, and your very first Medicare premium at 65 is priced off your single highest earning year in decades. The one year that looks nothing like your actual retirement income. That's the quiet unfairness of the lookback. It reads you at your peak, then bills you in your quiet years. Hold that thought, because there's an appeal for exactly this situation, and we'll get there in a few minutes. Trap 3 is the biggest single number most families ever touch: selling the home. Under current IRS rules, if you've owned and lived in your home long enough, a good chunk of the gain is excluded from your income, up to $250,000 of gain for a single filer, $500,000 for a married couple filing jointly. But everything above that exclusion is a capital gain, and capital gains sit on your AGI line. Sell a long-held home at 63, the classic downsizing year, and the gain above the exclusion can vault you not one step up, but 2 or 3. And 2 years later, your first Medicare bill arrives priced like you're wealthy, in a year when you're living on Social Security and a modest pension. Okay. Let your shoulders down, friend. That's all 3 traps: the conversion, the send-off, the home sale. Notice what they have in common. Not one of them is a mistake. They're normal moves made by careful people. The only villain here is a calendar rule nobody mentions. You can't control that the rule exists, but you can absolutely see it coming. And that's the whole job today. Now here's where it gets really important, because in a few minutes I'll show you the one government form that can erase this surcharge for a lot of retirees, and the situations where it can't. And a quick reminder, friend, this is for education only, not tax or financial advice. Run your own numbers or sit down with a qualified professional before you make a move. So let's close the loop on that opening number. Why is one new retiree paying $284.10 while their neighbor pays $202.90? Because 2 years before enrolling, one of them crossed $109,000, maybe by one conversion, one payout, one home sale, and one of them didn't. The surcharge for that first tier is $81.20 a month. 12 months. Just over $974. And I'll be straight with you, the same return raises your drug coverage too. That first tier adds another $14.50 a month on top of whatever your drug plan charges, and that one goes straight to Social Security or Medicare, not to the plan. The higher tiers run up to $91. Same lookback, same cliffs, second toll. Hear that again, friend. 1 return, 2 tolls. So what does the rule actually mean for your calendar? 3 things, in order. First, if Medicare starts for you at 65, the lookback window opens the year you turn 63. From that year forward, every dollar on your AGI line is a dollar Medicare will eventually read. Second, the thresholds move a little each year. They're adjusted for inflation. So the $109,000 and $218,000 lines are the 2026 numbers. The mechanism is permanent. The numbers get re-stamped every year. Third, this isn't a one-time toll. Every year of premiums reads its own 2-year-old return. A spike at 63 raises 65. A spike at 66 raises 68. The window never really closes. It just keeps sliding. Let me show you how this lands at one kitchen table. Take a couple I'll call Frank and Diane. Frank's 65, just enrolled in Medicare. Diane's 63, still working part-time. Back in 2024, Frank's last full working year, here's what hit their joint return. Frank's final wages, about $95,000 with the vacation payout. Diane's part-time income, $38,000. A pension starting up, $12,000. And one Roth conversion they'd been planning for years, $73,000. Plus about $1,500 of municipal bond interest on line 2A. Added up, $218,000 on line 11 plus $1,500 on line 2A. Their number? $219,500. The married filing jointly line, $218,000. Over by $1,500. Not $15,000, $1,500. So in 2026, Frank's first year on Medicare, his Part B premium is $284.10 instead of $202.90, just over $974 for the year, plus another $14.50 a month on top of what his drug plan charges. That one goes straight to Social Security or Medicare, not to the plan. Another $174. Call it about $1,148 in surcharges, because one return came in $1,500 over a line they'd never heard of. And notice, Diane pays nothing extra yet because she's not on Medicare. But when she enrolls at 65, her premium will read its own 2-year-old return. 2 people, 1 household, 2 separate lookbacks. Now, the form I promised. When your income drops because of a major life event, there's one form built for exactly that situation. It's called Form SSA 44. The qualifying events, right off the form, marriage, divorce, or the death of your spouse. Then the money ones, stopping work, reducing work, losing income-producing property, losing pension income, or an employer settlement. For most folks watching, the big one is stopping work. Retire, and your income falls off a cliff of its own. The form lets you ask Social Security to use your newer, lower income instead of that old peak year return. And here's a detail I love because it removes a worry. For work stoppage, if you don't have employer paperwork, the form says Social Security will accept your own signed statement, made under penalty of perjury, right on the form, that you stopped working. Now, you'll still need to show the income side the regular way, with a tax return or an estimate you back up when you file. But you don't need a letter from an old employer to prove you retired. Ray, what if my income dropped just because I retired? Does that count? That's exactly what it's for, friend. Frank and Diane? Frank stopped working at the end of 2024. That vacation payout was his send-off. Stopping work is a listed event, and his income fell off its own cliff in 2025. So he can file the SSA 44 and ask them to look at the newer, smaller income instead of that big final year return. But be clear-eyed about the other side. Look at what's not on that list. A Roth conversion isn't a life-changing event. Neither is selling your house on its own. If your income spiked because of a money move rather than a life event, the form generally isn't built for you. The surcharge stands for that year. That's why knowing the window at 63 matters so much. For the traps, the calendar is the whole game. Now, I want to be careful here because the point of today is not never convert, never sell, never take the payout. Sometimes crossing a line on purpose costs less than avoiding it. A conversion might save you far more in future taxes than 1 year of surcharges costs. A home sale that funds the next chapter of your life might be worth more to you than any premium tier. The point was never to fear the cliff. The point is to see it, so if you cross it on purpose, with the bill already priced in, instead of finding out 2 years later in a letter from Social Security. So here's the whole video in 3 questions. 1. Are you 63 or older, or within 2 years of starting Medicare? If yes, the window is open, and your AGI line is live. 2. Is a big one-time number headed for this year's return, a conversion, a payout, a sale? If yes, that's the year to know exactly where the thresholds sit before December, not after. 3. Did your income already spike, and has a listed life event, like stopping work, happened since? If yes, the SSA 44 exists, a short form, 4 pages plus instructions. Your one small job this week, and it takes 5 minutes. Pull out your most recent tax return. On a 2025 return, find line 11A. That's your adjusted gross income. On 2024 and earlier, it was plain line 11, and some of Social Security's own paperwork still calls it that. Same number, new label. Then find line 2A. Add the 2 together. Write that one number on a sticky note and set it next to the thresholds on screen right now. That's it. One number. Because once you know where you stand, none of this can sneak up on you again. If today helped, type the word lookback in the comments, all caps, so I know this reached the folks who needed it. And if there's a money move you're weighing at 63 or 64, tell me about it down there too. Now, I want to be clear with you, the way a good neighbor should be. Everything I've shared today is for education, to help you ask smarter questions. It is not financial, tax, or legal advice. Your situation is your own. So before you lock in a decision, sit down with a qualified professional and walk through your specific numbers.